Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus Award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, it's great to be back, Jim.
Ted, before we started the show, you said maybe we should talk about what kind of economy is Canada going to have, a D economy or a G. Now, I know you can get a D grade in school. I didn't know you could get a G. I have a feeling we're not talking grades.
We're not really talking grades. We're talking about what's going to be the dominant economic characteristic of the economy coming out of, as we work through the COVID-19 pandemic. So, I mean, right now, I would say we're probably at this moment in a D economy. And what does D economy mean? What do we mean by that? We mean a deflation-oriented economy, falling prices, falling demand. Well, that's due to the shock, of course, of the virus and people having to stay at home and quarantine orders and the like, and and plunging oil prices, which the Saudi-Russia oil spat didn't help. But that's where we are right now, and markets have, I think, dealt with that, and that was part of the reason why we had the big sell-off in March. But the big question is, where do we go from here? Will we stay in this D economy, or are we going to head to down another path? And what we've characterized as the G economy, which is the government intervention leading to inflation. So we've seen the foundation of this being set both in Canada and the U.S. by massive government stimulus in the U.S. and in Canada. And the question going forward, though, is it enough to offset these deflationary forces? Going into the pandemic, of course, we had a lot of debt on both sides of the border, and in the U.S., maybe, the corporate side was a bit more of a problem. In Canada, the household side was more of a problem. The U.S., the government side was a problem. Now it's even a bigger problem. In Canada, the federal government wasn't a problem. Now it might be a problem. Will these debt issues overcome the government spending side? And we just don't know. All we can do, though, is we can look for signs. And we talked a little bit about this last interview where I said I was going to be looking at the U.S. dollar. And a strengthening U.S. dollar would be de-economy oriented because it would support deflation in the United States. A stronger U.S. dollar would put downward pressure on prices and also make it harder for debtors with U.S. dollar debt to service those debts. So that would be a bad outcome. But since our last interview, the U.S. dollar has maybe come off a little bit. I think the jury's still out what's going to happen on the U.S. dollar. I know there are strong feelings on both sides. You have the dollar bulls who believe that the dollars are going to crush everything, and you have the dollar bears who believe that the dollar is about to collapse due to the government debt and other things. So I'm personally agnostic on what's going to happen, but I'm very keen on what happens, and it's going to tell us a lot about where we're headed. But there's some other signs that we're looking at in terms of insiders, for example. We're looking at what insiders are telling us whether now is a good buying opportunity in Canada, because Canada is an inflation-oriented market. We're not quite yet. We haven't quite yet got our signal that March 23rd was the bottom. I know there's a lot of chatter out there that March 23rd was the bottom and we're heading towards new highs in the U.S. But we haven't even got the confirmation in the U.S. that is the case. So I think the jury is still out whether this move up we've had in the U.S. market is a retracement of a bear market move or if it is a march to new highs. And, if you're invested in tech stocks and you're invested in, Netflix and you're thinking this is great, we're going to new highs. But I'm not sure you can have it both ways. Can the stay-at-home economy tech stocks continue to pull the market higher if we're all going back to work and everything's going to be great, which is kind of the bullish narrative that seems to be trying to emerge out of the U.S.? I mean, apparently Goldman Sachs is out saying, though, that we're at the bottom. Well, we may be at the bottom in terms of economic activity for now, but it doesn't mean we're at the bottom in terms of other things like bankruptcies. So we'll just have to see how it plays out. Again, we haven't made our minds up sort of whether it's D or G, but we're really paying attention because it's going to be the big, in our view, the deciding factor in terms of where you want to put your assets, where you want to lean them towards. And we've got one other scenario that we're working on that could emerge out of all this, but I think that's a little further down the road in terms of more of a benign outcome where it's neither D or G, but that's still work in progress that we're thinking about. I think we have to this point have to figure out, has the government stimulus worked? Because if it has, then you've got the economy not working at full capacity because not everyone's working, and probably not everyone's going to go back to work right away. So you are going to have inflationary pressures. But again, does the economy in the next few months still outweigh any of the stimulative effects that all this free money that the government's been handing out? Which one is going to dominate? So that's what we're keenly interested in right now, and we're looking at some signs. The Canadian Insider Index is an inflation-sensitive index. It's had a nice rally off the March 23rd lows, but again, is it a retracement or is it a breakout? We don't know. Now, for those who want to follow this E versus G competition, we cover this in our reports every day, every trading day for our subscribers and members, Canadian Insider Club members. We try and put things into the D or G context. And on Monday and Tuesday, we've made free on Canadian Insider our video summaries of our morning reports. And on Monday, we have a gold stock, which we believe has a nice G economy hedge, but should do okay in a D economy as well. And we also on today, I believe it was today. Yes, it was on Wednesday when we recorded this. We have a D economy stock that is a utility. That in a D economy, deflationary economy, we would be looking at really depressed prices. In that case, you're looking at bonds as being one of the go-to potential investments, and also utilities because they're what we would kind of say as bond proxies. So we will have to see what. Whether we end up in D or G, but we want to keep an eye on it, and we want to know what stocks, if you're playing the stock market, what stocks you want to hold for a D economy and what stocks you want to hold for a G economy. And I know, Jim, you have a lot of gold and gold miner investors. In general, the nice thing for the gold group is that the gold group, as a big group, can do well under both. However, within that group, and as we've also talked about on the show before, there are going to be winners and losers depending on the cost structures of those miners and also the quality of their assets.
We'll have more with Ted Dixon right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ted Dixon. Ted, the focus in Canada seems to be more help for the individual than big business In the U.S., the focus seems to be on big business. Is that going to have any influence on what kind of a recovery we have, including how my ability to speak?
Well, yeah, some of those are big words, Jim. So, it's going to be tough times for everyone. And I think when you look at what big business is getting in the U.S., it's a pretty sweet ride. And that's not to say the U.S. government has not moved quickly to help Main Street. They have provided some support, some good support to some workers who qualify in households. So that they have spent over $1 trillion, pushing money out the door. I think it's closer to $2 trillion now. So for sure, they realized back in the Great Financial Crisis they were seen as being too much in favor of Wall Street, not enough of Main Street. However, the problem right now, I think, with the U.S. approach in terms of the households is that it's a one-time shot, and it's not very efficient in some cases. For example, getting employment benefits and the like. It's state by state, and it's the stories that I've heard, are mixed. So the U.S. policymakers are for sure, they realize, oh no, we have to do something for Main Street because they're doing a lot for Wall Street. And when you look at what the Fed has continued to do, it is really amazing how the Fed has is attempting to become the central planner of the markets. It is unbelievable. And in fact, there is a narrative now that's percolating right through to the retail side, whereas because the Fed has Wall Street's back, and they will not let the stock market go down, and they will not let the junk bond market go down, and the Fed will buy everything. I mean, that is the narrative that is being developed. So that's a really pro-Wall Street, anti-market approach, where we have a central authority saying we will set the price. I mean, is this the 5-year plan? This is something you would have expected out of China or Russia, but this is the United States of America. And I mean, when you take a step back, you just have to think, where have we ended up? Now, I don't think the Fed is invincible here, but there's a narrative that there is. And I've been looking at the numbers in terms of what they're doing in terms of, for example, the high yield in the corporate bond market. Well, to keep it all legal, basically it's the Treasury that's backstopping the Fed for all the purchases it's making, but they do not have unlimited firepower. And I don't think it would take much if one or two hedge funds decided they were going to take on the Fed and say, okay, let's see how many junk bonds you really do want to buy. And it wouldn't take long for them, the Fed, in another market, in my view, this is my opinion, in another market downturn, to run out of ammo. And that is based off of looking at the term sheet of their secondary market facility. And you have to make some different assumptions of it, but basically, the numbers that I've looked at, I'd be surprised if they can buy more than 2 or 3 days of trading volume of some of those high yield ETFs. And they've committed to do more than just support the ETFs. They've committed to go in and buy individual issues. The junk bond market is, last time I checked, it is about $2 trillion in the U.S. And the Fed has nowhere near that allocated. They have a facility that may get them, as I said, a couple of days worth of trading volume on one of those ETFs. So we will see. We will see if someone takes the Fed on. In the old days, Jim, you would have a George Soros take on a central authority and win. Are those days gone? Can they never happen again? Maybe we'll find out. And, I'm looking forward to someone, hopefully, saying, we think that on a fundamental basis, maybe markets maybe some of these junk bonds and some of these corporate bonds are too expensive, and maybe they should be priced a bit lower where we can buy them lower. And if there are some fundamental players that have the firepower to make that decision and implement that strategy, we could be in for an interesting spring. But that would be interesting, and I'd like to see it happen. I would enjoy sort of this kind of I would enjoy being able to see that price discovery still exists in U.S. capital markets, because the narrative right now is that the only way prices can go is up because the Fed is there to make sure that's what happens. And I just don't think that's healthy in any kind of market economy. You need to have fear of a price going down, just as you need to have the greed of a price potentially going up. Otherwise, you don't get a proper price for an asset. So this is going to be something very interesting to see if we do get somebody with the firepower to fight the Fed and see how serious they really are in terms of supporting the high yield and the corporate bond market in the U.S. Because look, they can always go back to the Treasury and get some more money, but can they? This would be the trade, and it's not something that I'm obviously recommending. I'm just saying it would be nice to see a test of the Fed's resolve here in terms of, are they really willing to back up this narrative? Because the Fed is basically saying, well, this is to keep markets orderly and well functioning, but players on Wall Street have taken it. Oh no, nudge, nudge, wink, wink. That really means they have our back, and a bottom is, a floor has been set. Well, I think a floor should be set by market forces, not by a central authority. So we will see. What I want or what I would enjoy is just one person's opinion. However, I have a sense that there's probably other players in the market thinking along the same lines, but whether we get that type of a challenge to this narrative that has emerged, that the Fed is there, the Fed will do whatever it takes to keep prices higher. I think there's been a misperception amongst market players that Jerome Powell is Mario Draghi. That when Mario Draghi said, he will do whatever it takes, it was a life or death situation for the Eurozone. And I think, the Fed wants to avoid a life or death situation for the U.S. financial system, and that's correct. That's what they should be doing. They should be the lender of last resort. I mean, but the question is at what price? And the Fed in its term sheet, it says they will not buy, for example, these ETFs above net asset value. So we will see. We will see if this narrative that you're hearing from Wall Street works out, but we'll see if we get a test here to the downside. And I suspect there's a decent chance. But look, what did the last 10 years, from 2009, 2019 show us that fear of missing out was the key factor. Have we gone back to that scenario? Perhaps, but today in the markets that certainly was not the case. But that there is a strong narrative that we are headed to new all-time highs because the Fed has your back. So we'll see if that's what happens.
We'll have more with Ted Dixon right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, are countries like China, India, Russia going to dump their gold? Because over the last 5 to 7 years, they've been buying all the gold they could find, but will that philosophy change now?
Well, all one can do is make some assumptions that if a central bank has been buying gold, it's been for reserves, and you use reserves when you need them, and you don't trade them. And if a country runs into dire straits, and they will sell their gold. That's why I think sometimes, it's frustrating for gold investors on a bad news day and gold goes down. Why is that? Isn't gold supposed to be a hedge? Well, first of all, you're supposed to own your gold before the bad news hits, not when the bad news hits. It's like phoning your insurance broker when your house is on fire, saying, "Oh, can I get some fire insurance?" If your insurance broker is really good, he will get you a policy, except it will cost a lot of money. And, so you don't want to be buying gold when there's some bad news hits the market, because often what is happening, I think, and this is my assumption, is that you've got some of these central banks and countries that have had gold for a rainy day having to sell, not because they want to, not because they've lost interest in gold, but because they need U.S. dollars for whatever reason, and they've had these reserves, and that's why they sell them. So, and forced selling tends to be a buying opportunity. So when you see gold going down on a bad day, on a bad news day, more often than not, I would view that as a buying opportunity because it's largely driven by forced selling. So yes, we may see some central banks. I'd be surprised if China is one of them. One never knows with China, but I know I would be surprised if China were to. But you could still see a number of other central banks having to, not because they want to, not philosophically, but just out of necessity, having to raise some cash.
Was it a mistake for countries like Canada and Britain to get rid of their gold reserves?
Well, that you could have a panel discussion on that. I mean, certainly the timing couldn't have been worse. Then that gets into the whole structure of our reserves, which the last time I checked, which has been a few years ago, so maybe there's been a change, but it really looked more like a hedge fund than a reserve, than what you think of as reserves, where there's, that we have these currencies that we borrowed essentially to get, and so we've got all these currencies. So, I think there's more to it than just selling our gold in Canada. I think the whole sort of approach towards reserves, it would be nice to see that become an election issue, Jim. It really would, but I certainly don't see the incumbent party, the Liberals, doing it, and I don't see a lot of interest in the Conservative Party because at the end of the day, both these mainstream parties want to appeal to their 35% base, and that means talking about things that don't involve central bank reserves. I mean, that just doesn't, it just doesn't get the vote out for what they're looking to do, which is really too bad because I think you could tie it into something about where we go down the future in this country. But, that would take a lot of vision in a leader. And I haven't seen any leader on the national stage talking about that. I mean, Maxime Bernier was probably one of the few who could have talked about that. But, for whatever reason and whatever advice he was getting, he decided to focus on immigration and other things. And, I didn't think it would work. And, I suggested to his group, his people, that I didn't think it would work, that they should focus on the economy. Anyway, we saw what happened. So, it won't be Maxime Bernier that probably, maybe you never say never in politics, but, it's just too tempting for politicians to move to sort of these emotional issues, and talking about selling your gold, it probably resonates with a number of listeners to your show, but to the broad public, until you're in a crisis, it's not going to resonate, and by then it's too late.
Did it help or hurt the Tories with Andrew Scheer saying that the federal government has been too generous with its COVID benefit program?
Well, I haven't heard him say that, so I don't know the context. And one assumes that the Conservatives will have a new leader in any event, so, he is a caretaker leader, so I wouldn't, if I were a Conservative Party member, I wouldn't be too worried about that statement, only because it will likely be forgotten if they do get a new leader, and we will have to see what the new leader has to say about things on that. But let's see what the Conservatives can come up with, and one hopes that they have someone who's willing to sort of and able to get their head around the challenges ahead. We do have a large deficit now. How are we going to pay for it? And what are the, I have a feeling what the instincts of the current government are, how they're going to pay for it. But the Conservatives are going to have to address that issue as well.
What do you think would be the key issues for the next election? And we're hearing that perhaps the Liberals are thinking of a snap election after the Tories name their leader, because they're leading in the polls right now, enough to give them a majority government.
Well, I think a lot will depend who the leader is. If the Conservatives elect a strong leader, they will not call an election. If the Conservatives elect a weak leader, they will call an election. And when I mean weak and strong, I don't mean weak and strong in terms of what resonates with the Conservative Party's core base. Okay, that doesn't necessarily equate to winning an election. Being a strong leader requires having a depth of understanding of the issues for all Canadians, being able to communicate those to all Canadians. So it's not just, being able to criticize Justin Trudeau, because that's actually the easy part. The hard part is convincing Canadians that you can do a better job than him. And I know there's a large number in the Conservative Party that think, well, anybody could do better than Justin Trudeau. Well, that may or may not be the case, in the Conservative Party in terms of people who feel that way, but the electorate may have a different perspective, and it's really, really important for the Conservative base and the Conservative members to really provide the electorate with a benefit of the doubt that they're going to come in to this election making a decision who is the better leader. Yes, we know the federal government's made mistakes, but Justin Trudeau is a great communicator, and he will communicate his mistakes, and whether it works or not, we don't know. But will the Conservative opponent be able to hold Justin Trudeau effectively accountable for those mistakes? I mean, that's a strong leader, okay? Not one that gets sidetracked on and gets baited into issues that derail that discussion, because Justin Trudeau needs to be held accountable. He needs to be held accountable why they drag their feet on closing not closing the borders, but it's implementing border controls. Okay, we have a border, right? During the pandemic, they were very slow and sloppy at the border in terms of implementing controls. They need to be held accountable for that, right? You need a strong leader. Conservatives need a strong leader that can do that job. And the problem that some would have, I think, as Conservative leaders, is easily having the narrative turn the tables on to something completely different, into a social policy issue that distracts the media and distracts Canadians away from that accountability question. So they need a strong leader that can hold their ground and not be knocked off their agenda in terms of holding Justin Trudeau accountable by peripheral issues that the Liberals will be very, very I don't want to say effective at, but they will try very hard to do everything they can to knock the new Conservative leader off that agenda of holding the government accountable. So it will be interesting, and for Canadian democracy, I really hope that the Conservative Party is able to come up with a leader who is able to hold Justin Trudeau accountable, and then Canadian voters can make their minds up. I mean, that would be a good thing for democracy, and have a good accountability, put Justin Trudeau to the test, and if he passes the test, he wins, and if he fails the test, he'll probably lose. But you need to have that accountability part of the next election, and that's why the Conservatives need to have a strong leader who can carry that part of the campaign across the finish line. So hopefully they choose wisely, and I wish them very well on that.
Is name recognition an important part of that? If they elect a who's that leader, would that hurt them?
Initially, but not if that who's that leader is effective. because who's that leader, if they're effective, will capture people's imagination quite quickly, and it can be a big plus. And, so no, out of the gate, it is a cost, but if that person is very effective, you got to take that risk, and you have to say, look, let's take that. But you really have to do your due diligence on a name that's not well known to ensure that that person's not just sort of a one-time flash in the pan. I think the Liberals made that mistake with Ignatieff, right? He didn't have any name recognition, and the Liberal Party thought that he had the goods to deliver a solid campaign, and he did not. And so the Conservatives have a big challenge ahead of them, and let's hopefully they'll use it as an opportunity to really reinvigorate their organization. That would be great.
Yeah, well, after a kick to the gonads like we've received, wouldn't your best campaign slogan still be, "It's the economy, stupid"?
Well, we'll have to see, Jim, whether we're in a D or G economy, won't we?
Or a D and C economy.
C being?
Yeah, it's a doctor joke. Anyway,
I see. A D and C. Okay, yeah. Well, we may get there too. Maybe C will stand for, a
cure.
A cured economy. A cured economy. We could all hope for that, couldn't we? That would be great.
Well, wouldn't the key be to support small business, considering 70% of our jobs or more are from your smaller 50 people or smaller businesses? Well,
that's right. And, I give Bill Morneau credit. There's a lot of mistakes the federal government has made in handling this crisis. But on balance, and I've been critical of Bill Morneau in the past with his handling of small business when he brought in those tax changes. But he's balanced. He's had a tricky balancing act. He was handed some pretty lousy cards here, and he did put small business out in front. The small business people I've talked to, have got assistance quite quickly, and they've done this wage subsidy, which is a very good response. And there was some debate about it should be something else, or no, it was a very good response. It was initially 10%, and that wasn't enough, but it was quick for small businesses. Small business was able to get it very quickly, but then they boosted it to 75%. So I give Bill Morneau an A here for the way he's performed, and he coordinated with Stephen Poloz, who have also been very critical of, and who's going to be retiring. But together, I think they really did Canada well, and did a very they came to the plate as public servants and did the best job they could. So I'm quite I'm quite proud of the job that they did, and I think it's too bad we just didn't have that similar type of performance on the health side, which is ironic because, you think the Liberals are, their strong suit is the social policy health side, but, boy, there's a lot of questions that need to be answered on how they handled the pandemic, Jim.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca. His website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.